Hey everybody, Brian Shannon here from alphatrends.net. Today is Thursday. It's the 3rd of July, 2014, and the market's closed for the week. We have a long weekend ahead. So let's take a look at the market. Once again, equities are behaving well. We had 1.2% gain for the week for the S&P 500. The NASDAQ up 2%. Semiconductors continued their blistering pace, up 3.6%, and now up 20% year to date. So we continue to see people saying the market can't go any higher because of the VIX, and I saw someone saying the tricks last week, and the fact is we're in an uptrend. We're innocent till proven guilty. About a week and a half ago, we were a little bit cautious as the market got below that 5-day moving average, and it started to show a slight downward slope to that 5-day moving average, but we didn't get downright bearish because we were still holding key levels of support. As the market got back above that 5-day moving average, we went back to more neutral with a chance of continuing higher, and that's exactly what we have. So when the market gives me near-term caution, that's when I get cautious. It's not time to get cautious when the market is hitting new highs. It's time to get cautious when it retreats from those highs and pulls back and says, now is the market going to digest those gains through time like it did over here, or are we going to break a bigger level of support and then break down? So far, all of the corrections that we've seen recently have just been more little time corrections that kind of suck in the short sellers underneath brief levels of support breaks, and then we go on to squeeze them higher. So the S&P 500 obviously is at all-time highs here. It's up a lot. It doesn't mean it can't continue to move higher. Nobody knows where the peak will be. I mean, 200 is a nice round number. I'm sure some people will call that the top and all that sort of thing. But the fact is, let's listen to the market, not listen to the opinions of people who are basing their trades on different technical indicators or psychological indicators or whatever it may be. The fact is, only price pays, and that's where 95+% of your analysis should be focused. You get cautious when the pattern of higher highs and higher lows is broken, move to the sidelines, reassess, look for the stocks that are behaving well, and this is from a trader's standpoint, of course. Long-term investors still have really nothing to worry about for a while, as we're above a rising 200-day moving average, which is way down here at 183. So it doesn't make sense to be piling in at these levels. Instead, as a trader, what I focus on is trying to find the low risk, high probability trades when the market can support those. And as it broke beyond this 195.5 level that we thought was important, that's where it became more neutral, and we were talking about it being in an primary uptrend and innocent until proven guilty, and that's still the case for the S&P 500. Next week, I think 197 is going to be important initially. That'll be our first little band of support down to 196.50. So 196.50 to 197. That's our bigger band of support that we want to see hold next week, as that was, let's go to a 65-minute time frame. An important break right there, and we've got this little support. So 196.50 to 197. As long as we remain above that, we remain innocent till proven guilty. The NASDAQ got a little bit stretched here to the upside this week, but that doesn't mean it has to do anything. It doesn't mean it needs to go lower. We did get back above this 5-day moving average and held that rising 5-day moving average. So again, intermediate term trend is innocent till proven guilty with a rising 5-day moving average. And now I think the more important level early next week will be about $94.85. By the way, each and every day that the market's open, I do analyze the indexes and typically Apple, and that is right now only $149 for an annual subscription. That's going to be going up real soon. So if you're interested in just that analysis, then I would suggest you take a trial for a free week, and then it's only $149 a year. That price won't be honored again once it does go up. So if you have an interest in that, go ahead and look into it at alphatrends.net. Below that 94.75-ish, I think 93.50 is going to be important. Russell 2000 back to the upside here, and we saw it hit a new high intraday on I guess that was Tuesday. And, here's the thing. Once we see this market, and that I've been positive the Russell 2000 since we got above that 113.50 level. But we saw that it did make a new high slightly. And what often happens is what I talk about buying breakouts, that you don't want to buy a breakout past this level because you have to ask yourself, where has it just come from? Well, in the last month, it's gone from 111 to 120. Buying a breakout up there isn't the most educated way to look at the market. Instead, you look at the intraday levels, that is on the short intraday time frames. And this week we saw that we hit a new high for this move by breaking past 119, and that resistance came down and was tested as support here. So Tuesday's low just below 119, that's going to be our first important level of support that we want to see hold next week. That's prior resistance, which was tested and held as support. It's also where we saw that rising 5-day moving average. So 118.50 to 119, that's the important band of support that we want to see hold next week. If we get down below that and hold below it, then we have to become a lot more cautious about this market in the intermediate term. We're still riding this trend line, and we're still positive, obviously, for the Russell 2000. If we see further, or if we see a correction, I'm thinking it probably is still going to be something that's more through time rather than price. Semiconductors, again, these had a great move this week. They were up, 3.6% for the week, and that adds to this big run that they've had. So people have been looking at these semiconductors and saying they're up too much, this can't sustain itself, it has to pull back. We got very cautious as it was testing that 48.5 level, but as it got back above, and we got cautious here. We didn't get bearish. If it broke below here and held, then we were going to get more bearish on it. But instead, the market reversed back to the upside and squeezed the shorts that participated in the market during this time frame. So we're back to higher highs and higher lows after a brief sideways correction through time. 49.50 is going to be our key near-term level of support over the next coming weeks. And I think that the first level that we may see tested next week would be about 50.20 to 50.30. If we hold above that, then we remain innocent till proven guilty. If we break below it, we get a little bit more cautious and see how it handles a test in this area. Financials broke out, and that's something I spoke about last week, saying that the key support of 22.50 was tested. It was tested a couple times in here, and that these consolidations tend to resolve themselves in the direction of the primary trend, which of course is higher, and it wouldn't surprise me to see further upside. And that's exactly what we saw here, that we saw this higher low, and then we saw a breakout. That breakout pulled back briefly and then gapped up today. So the financials are still innocent till proven guilty in a major uptrend. I think that about 22.85 is going to be our first near-term level of support for next week we're going to want to monitor. So that's actually 22.80 to 22.85. As long as we remain above that, you give the benefit of the doubt to the buyers. So the bigger loser this week was the bonds. You can see here that they were down 2.26%, and now that's kind of putting this market into a little bit of jeopardy. What we spoke about last week was how it was bullish that this support level had held, and that it seemed as though higher prices were going to continue. They did for a bit, but then they reversed. So if you were long based on this breakout, you obviously want to have a stop somewhere. Now, I don't trade these bonds because they gap every single day, and it's hard to manage risk because you see these big gaps like this. It's also why I don't trade gold or any other commodities, where there's a essentially a 24-hour market. But anyways, the TLT is the 10-year bonds, and we are breaking this support right now. Now, it's just dropped pretty hard this week, so I think a little bit of a rally up, maybe towards 112, where these moving averages are congregating. But those moving averages are starting to decline with the 10 and 20, and the 50 is flattening out. So I think that now what we're seeing in the bonds is we saw a very nice rally up to a prior level of support, and now we're going to see a little bit further consolidation, pullback. We could see it down, maybe down near about 109-ish. I think it would be very reasonable for the bonds. I don't see a major reversal in this market yet, but it's definitely worth noting that we're seeing some signs of support being broken, and that tells you, with this, especially with this lower high, that bonds appear to be, money appears to be moving out of bonds right now. The VIX, VXX, continues to do what it does best, which is to destroy wealth. So if you're trading the VXX, you seriously need to understand how this product is structured. Even as a trading product, I just don't understand why it trades 27 million shares a day. It's flawed. It's a piece of garbage. Stay away from it. Apple did break that 92.50 level that we spoke about. What I was hoping for, or the scenario I was looking for, was maybe a rally up towards that level and up a little bit through, and then pull back, hold the rising 5-day moving average, and then to purchase it. That's the scenario I was looking for potentially to happen. That, of course, didn't happen. It broke 92.50 and continued to move higher. So if you bought it past there, for me, I wasn't comfortable buying it there because I thought it had just rallied 2.5 points and not comfortable with it. It did consolidate here a little bit the last couple days, and Apple, I think, if you want to get long this stock, I think that in this area is the time, with a stop probably just at about $93 a share. It seems as though it's going to be heading for 100. I wouldn't probably take a full position because it may consolidate a little bit further, but Apple is definitely looking a lot more like it wants to continue to move higher. The big IPO recently was GoPro, and we'll talk about that one in a moment. Let's talk about these stocks that I was mentioning last week. JASO, I'd said that I would consider purchasing a small piece here above 1092 and then adding to it if it got above this level right here. I did buy the stock, and in Alpha Trends we bought it over here, and we took a loss of about 45 cents, getting out right around, I believe, in this area right here, and that was a good exit. It was a good loss to take because the stock continued lower. We have no control over what they're going to do, but we can control our actions and be prepared for if they don't do what we expect them to do. So that was a small loss, and it's time to move to the sidelines on that. This ISR that I had mentioned a couple weeks ago as a potential short squeeze candidate over in this area. I had suggested last week that a worst case stop would go down near about 290, and that was hit today. So I've been out of it since it broke this level right here in the 5-day moving average, but that's something we talk about each day in Alpha Trends as well. Longer term, I think it's still got some potential, but right now it's below a declining 5-day moving average and broke some support, so I'd rather be on the sidelines waiting for it to reset up again. Ballard Power didn't do anything here. It broke a little bit of resistance and rallied very quickly. In Alpha Trends, we sold some here, and we sold the balance of it right there, so we got stopped out. And as I told subscribers, it sucks to sell this thing when you have high hopes for it because it's got a great looking chart, but we were out of this thing profitably, and I think that now it's time to just let this thing settle down a little bit further and see if it sets up. Right now, I wouldn't say what the action point would be. I suppose it would be probably above this level here, but that's too far extended, so I think it just needs a little bit of time to consolidate. Moby didn't do anything either. If you got involved in Moby, that was something that you might have gotten out of with a small gain. In Alpha Trends we did. We took actually a small loss. That's right, I'm sorry. But a big winner this past week that I'd mentioned last week to keep an eye on was Biogenetic, saying that it seemed like if it could get above this level that and I still think it probably has room to 350. We were stopped out of it today in Alpha Trends, but that was for the swing trade. Longer term, it still looks like it can go higher. So trade the stocks based on your personal levels of risk that you're willing to commit, how much time you're willing to commit, what your typical patience level is. I'm not speaking very well. Some stocks to keep an eye on next week. I think that SIBO looks vulnerable here. You look at this weekly chart. It's broken its longer term uptrend. It found resistance at the 40-week or 200-day moving average, which we can see right in here, and it's just looking like it's vulnerable. It's making lower highs and lower lows. We've got a declining 10, 20, and 50-day moving average. It's kind of holding on a ledge here, and maybe breaking back below this this little recent area. It will continue, or maybe the low for the week. Whatever you do, if you decide to short this stock, remember we're in a primary primary uptrend, and it's difficult to make money on the short side. So if you get short it, I'd say your worst case stop would go just above 49 bucks a share. If it reverses, these things can reverse hard. So be extra disciplined on your short about taking a small loss if you're wrong. CTSH, I've got a good nickname for this one. I don't think I should say it, but this one looks like it consolidated nicely here over the last several months. And on the daily time frame, we got involved in this with Thursday in Alpha Trends, and it's looking like it can continue to move higher with a absolute worst case stop down near 49.50. And the shares of F5 look like something that are setting up for continuation. You've got this longer term weekly chart. We saw a nice rally at the beginning of the year. It pulled back, made a higher low, and it's looking like it's really just getting set to go. And perhaps it needs to clear this level over in here at about what is that? I guess about 114.5 ish, or maybe you buy it above this past week's high, right around in this little level right in here, 112.60 ish. If you buy it above that level, then I would say your worst case stop would go at about 111. And of course, as the stock moves, you've got to raise your stops. I think that a stock like F5, if you have at least $1 winner in it and it reverses, you have to set your stop to break even. You can't take a loss after it's gone $1 or so. Again, I'm going to talk about GoPro in a moment. Microchip is another one, MCHP. We were in this one in Alpha Trends as well, got involved today. I'd say a worst case stop goes at about 49.50 if it's something you're looking at for next week. A little biotech stock that has been kind of choppy here, but looks like maybe it's setting up. I don't really care for trading biotech stocks, but I bring opportunities to people whether I'm going to trade them or not. And here you can see we got above that 5-day moving average. We gapped up. The stock saw lower highs and lower lows. There was no reason to buy it. There was no reason to buy it even here because the 5-day moving average was declining. Then we saw that rally. Now it's pulled back and tested the rising 5-day moving average. So what we want to see now is a higher high. If it can take out this past week's high, then I think that Nectar has the potential to continue to move higher. And I would say a stop would go down just about $13 a share. And it looks like it has the potential to maybe go on and continue to test those highs. It is a riskier stock because it's a biotech, so keep that in mind. Wolf is another one. This one is VCA Antec. Anyways, it trades a little less than 1 million shares a day. The weekly chart, you can see it broke some resistance, back here. And then at this level, and now it looks like it has the ability to continue to move higher here. So I think that you keep this one on your radar. It's been a little bit choppy up in this area. Perhaps it needs to clear this little high right here at about $36.30. That's just eyeballing it. But again, it's, understand the personality of the stock and whether it makes sense for you. This stock can have some big rallies and sharp pullbacks. So you'd have to have a big stop in this one. I think a stop down near about 35.20 would make sense. Maybe 35.50, but it does look poised to be able to break out and continue to move higher. So keep a close eye on that one. And finally, GoPro came public and has had a real strong run here. We can see that let's take a look at the Fibonacci. Now, this is something I'd written about on Alpha Trends, or I'd posted at StockTwits. You can see we've got a 38.2% retracement that is starting to hold a support in here right now. Additionally, let's say if we go to the volume weighted average price since the event, let me change the candles here, and we'll make them 10-minute candles from 130. You can see that this level right here, this is 39.42. That's the volume weighted average price since it came public. So right now, I think that this stock got a little bit ahead of itself, and it is currently pulling back. It's got this little pattern of lower highs and lower lows right now. So I think that if you see it come down below 40 bucks a share next week, in near this 50% retracement, so I'd say really start paying attention to it about 39.70 to 39.40. Once it gets down into that zone, I think there should be buyers in there, and we're going to look at shorter term time frames to see if that is in fact a place where the buyers show up. We don't want to buy blindly as it drops into that level, but that's the level we want to start watching for carefully on a shorter term time frame, like a 1 minute chart. And you can see today where GoPro gapped higher, what we saw was it just sold off throughout the day. You don't want to buy a stock while it's below declining volume weighted average price. That'll do it for me. I hope everyone has a good long weekend, safe long weekend, and I'll see you back here next week. Thanks.